Hey everyone, James Baker here. I just did an expert interview, and this is a clip from the interview. I'm speaking with different experts from all over the world to understand questions about how my clients are taxed when they go into their country and how their clients, people from that country, are taxed when they have US companies. And this is the kind of thing we're talking about on these interviews. If you want to see all of the clips from this interview, you can go. There should be a playlist on the channel. And if you want to see more interviews like this, subscribe to the channel. And if you have someone you'd like me to interview, a tax expert from your country, so you can learn more about it, send me an introduction email. I'd love to meet them and interview them. Okay, thanks for being here, and let's go to the clip. So explain to me about this tax, the VAT tax. Isn't it usually on sales to people inside of Dubai, or is it on everything?
Yes, it's for the whole of GCC region,
Okay,
Saudi
so it's only on
Arabia.
sales to that region you pay VAT tax.
Yes, it is one unit for VAT tax, which started in 2018. It is one unit, and VAT is paid on sales within the GCC countries, Saudi Arabia, UAE, Oman, every. But the corporate tax that is going to start, that's in UAE, and that is on business income of sole proprietor or corporate. It's unfortunately they're calling it corporate tax, corporate tax, corporate tax. It's not corporate tax. It's tax on businesses. If you're doing business, you have to pay.
So what
Here's
about what in this example? Because I have an example of a client that I am working with. Basically, we have let's say an American and a Portuguese guy. They both own a Dubai company, which owns an LLC that they operate with. The LLC is providing services and it's paying related parties for delivering the services. Basically, they say they sell $1 million of services. They pay out 300,000 to each partner, so there's still a profit of $500,000 in the company at the end of the year. Would that be subject to tax in Dubai?
yes, if they are registered here, if they are resident here, all those
Well,
same
no one's
rules.
gonna live there. Just the company would be registered there.
So it will be resident company and it will be taxable in
What
Dubai.
about there's no like tax-free zone? There's no like the
There are free zones, but free zones are only for exporting country, exporting services and goods, and that is called now qualifying income. If they are earning qualifying income, they don't have to pay corporate tax. They have to register. Just imagine 900,000 businesses have to register in the next 1 year in Dubai. So much work to be done
how
with
many?
the federal 900,000, about a million
They all have to
businesses.
register for taxes in Dubai?
They have to register for corporate tax with the federal tax authority. Yes.
So what if I'm trying to find a way for this situation to be tax free? So what if the and I
Don't
love
worry. You
what if
make
a
a
Dubai company owns a Panama corporation or a BVI or a Cayman Corp? Does it shouldn't pass through, right? The it's just like owning stock. It doesn't matter the value of the stock. It's not a pass through entity, right?
now the interesting thing is, as you know, tax laws are quite deep, quite complex. So we are just talking about the surface, but they have inbuilt in their law that all these avoidance things will be disallowed. Obviously, when it comes to their notice, obviously when it comes to the notice of FTA, but still they have from the day one put in the arm's length principle and all the good principles in the world in their tax law. And there are ways, but still you have to appreciate that they are going it by doing it the right way.
I guess I was looking forward to it being like lower tax.
Actually, 9% is good. 9% is not that much.
Yeah, it's better.
It's some profit.
In this example, I'm working with these clients. I'm trying to like it's basically an American and a Portuguese guy. We have to find a country because in the U.S. there's no like blacklist. There's no such thing as a blacklist. Every country follows under the same rules. So, um, if you cross the I's and dot the T's of specific criteria, there's ways to defer taxes on profits, but with from non-U.S. people. So the issue in this example is that we have to find one that from a Portuguese perspective, isn't a tax haven because they have like a blacklist in Portugal. So then and their partners and want to own the same company. and Dubai was the answer. And it was better when there's no tax in Dubai. I mean, but I understand the 10%, but in the US it doesn't make a difference. Like if you're not paying at least 19.6% or whatever it is, 19.7%, it's still like guilty income, or it's still like it's still going to be taxable somehow in the US. Thanks for sticking around to the end of the video, and I want to share some things I have to offer you. If you're looking for help expanding to the US or fixing a tax problem, the quickest way to contact us is to schedule a free call in the description below, or at visiting jamesbakercpa.com/schedule. If you want to skip the line and speak with me directly, there's also a link in the description to schedule a call with me, which is another great option. I encourage you to join our Telegram and Discord groups, because in there we're announcing when I'm going live, I'm participating, I'm answering questions in real time. It's all free, and it's a quick community to engage with other entrepreneurs and people like yourself who are international and learning about this stuff. And I think it's a really valuable place to be in. At the end of the day, if you just subscribe and see me on the next video, that works too. So thanks for being here, and I'll see you in the next video.